Okay, it's time. What is it? Is it less than 20? I don't even know. I think it's 20. But we are gonna talk about my current quote unquote model. I wouldn't really call it a model, I'd call it a framework. But we can just call it that for simplicity. Alright. It's real simple, and a lot of you already know it, but might as well put it in clear words so people have it. First step of the model: identify daily profile. It's identify draw liquidity. Now this is going to include multiple things though. So first part of identifying draw liquidity is identifying your weekly outlook and your weekly draw liquidity. So that's the first part. You need to be aware of hold on. You need to be aware of your weekly outlook and your weekly draw liquidity. What I mean by that, go watch the video that shows how I do my weekly outlook. I don't necessarily use weekly profiles, but I'll use this week as a quick example. So to start off identifying draw liquidity, I identified what I wanted for the week. So when you look at this week, this is me personally, all I do to like decide my weekly outlook. Monday and Tuesday don't have news. We have high impact news on Wednesday. So going into the week, I'm going to expect Monday and Tuesday to be slow. But I'm also expecting low of the week to be somewhere around Tuesday to Wednesday because we have our first high impact news event on Wednesday. So that's really all I do. It's like, for one, I forgot what the stat is, but I think the stat is that like 70% of the low of the week or high of the week happens on Tuesday or Wednesday. So that alone already has me looking for lows of the week on that day. But I just align that idea with what the chart's doing. So that's the start of the weekly outlook. Combining the weekly outlook with my weekly drawn liquidity looks something like this. So the week started. I want longs because I want all-time highs. So that starts on the monthly time frame, but I want all-time highs. So from that, what do I want on the weekly that would make sense? So far, the weekly isn't telling me much. I know we have this weekly for value gap that we filled. For me, that would lead to us being long based on my all-time highs ideas. But going into the week, if I know I want to be long, that means I want the start of the week to go bearish. So the week opened up here, went bearish into this daily order block and into the weekly for value gap. We got a high time from SMT. Now we're going long. So that aligns with my weekly outlook of me wanting low of the week on Tuesday or Wednesday. And it happened in high time frame PD raise. So that's what I mean by like combining your weekly draw and weekly outlook first so that you are trading in line with the marketplace. But the more important thing and the thing that you'll be looking at more on a daily basis is obviously your draw and liquidity for the day. So that's just going to include everything that I taught you in the draw and liquidity class. So we'll just call it DOL checklist. Just use everything from the draw and liquidity class to identify your draw and liquidity. So this doesn't mean only identify draws and liquidity to one side of the marketplace. Identify what is a logical draw and liquidity potentially anywhere. Because this is the next step is a filter. So you do this, and then for me personally, the next step is daily profiles. That to me is like my filter. That's how I decide if the current draw and liquidity I have is valid or not. Or like just what makes sense narrative wise. Why is it not bold? So next would be daily profiles. So like so what I mean by a filter is like if you look at today we had previous day's low or a previous session, bro, holy shit. We had a previous session low to the downside. We have London low here. But why didn't I want London low even though in my draw and liquidity class I showed that you should want previous session liquidity? Because of the daily profile. The daily profile filtered out this draw and liquidity and made me look to the upside for previous day's high. So that's what I mean by that. But I mean, obviously, you know what I mean, identify. Okay, I'm going to fucking crash out. Identify whether it's AMD, New York reversal, or New York continuation. Okay? That's really it. I'm not going to put the details of what each of these things are, because you should just watch the class. But that's all you need. Then step 3, real simple, real easy. I guess there's 4 steps, but step 3, yo, I'm about to fucking punch my monitor. All right. Step 3 is 5-minute bearish order flow. Or 5-minute order flow aligned with daily profile. We'll just call it DP and DOL. Okay. I don't even need a description for that. Or I guess I can. So what I mean by that is, well, no, because all you need to do is watch the order flow class, and then you would know what I'm saying. I'm trying to figure out like a little description I can put here. Yeah, there's not really a description I can put here. I'm not gonna lie. Just watch the order flow class. If you don't know what I mean by order flow, just watch the order flow class. Okay. Then the next and final step is just finding an entry. It's typically on the 1 minute. This is literally this is my strategy. This is it. Identify the drawn liquidity. Identify the daily profile, so in that way you can decide which drawn liquidity is more likely to get hit. After that, identify the 5-minute order flow that aligns with your daily profile and your drawn liquidity. Then find an entry based on the 5-minute order flow, but you use the 1 minute. You can use the 5 minute if you want. Sometimes I enter directly off a 5-minute order block, but usually my entry and my stop losses are based on the 1 minute. So this is it. This is all it is. So now we can go through a couple of examples, but this is my model. This is it. So everything on my desk is falling off, and I'm about to punch everything. All right. So now let's just go through a couple examples. Let's go through today real quick. So midnight opens here. So first thing I identify, drawn liquidity. I see previous day's low is swept. That alone already makes me want longs. I just like that alone does it, but obviously it doesn't confirm it. So the higher time frame narrative is aligning. My weekly outlook is aligning where I wanted the high time frame SMT within the weekly fair value gap. We have it. So that is already making me want to be bullish, but I can't ignore previous session liquidity. So I'm watching London low and I'm seeing Asia low. Then to the upside, I'm seeing the set of failure swings that I wanted yesterday in PM session that we didn't get. That looks very spiffy. I'm also seeing previous day's high untapped with relative equal highs, and the idea of pushing the previous day's high aligns with my weekly outlook. So I'm leaning more bullish, but I do see the previous session liquidity to the downside. Then I'm looking at the daily profile. Midnight opens, manipulates down into this failure swing at previous day's low, and into the weekly fair value gap right here. This line is the weekly fair value gap. That is our key level. We get the reversal, and while doing that, we also swept some Asia session liquidity. So this is a New York continuation day. Looks very clear. The only way that I would have shorted is if we disrespected this range, which we didn't even come close to. Yeah, so now that's the first 2 steps. Identify the drawn liquidity, identify daily profile. I'm bullish based on these 2 things. My first drawn liquidity is this set of failure swings, the high of those failure swings. Then I'm looking at previous day's high. So now I go to the 5 minute because we need to go to step 3. Identify the 5 minute order flow aligned with daily profile and drawn liquidity. So here we have these relative equal lows within this gap, which I thought would lead to a push into this 15-minute gap just because I wanted equilibrium with this range, but we didn't get it. Why didn't we get it? Because 5-minute order flow already switched bullish. So we switched bullish on the 5 minute, and then this push down also gave us an SMT. Just completely bullish price action on the 5 minute. So knowing that, if you wait for the macro, oh yeah, I should make a side note of like the extra rules. But if you go to the 1 minute and wait for the macro, I mean, if you're feeling bold, you could have entered right at 950 off this order block. That would have been a bold entry in my opinion, but would have been valid because we got this SMT within this 5 minute gap and we're clearly bullish. I personally didn't take it. My entry today was a little bit unorthodox. So this isn't like the most textbook example ever, but as I taught you guys about low resistance liquidity runs, which we have right here is a bunch of set of failure swings, when we take the first low of that run, we typically go get it. We're not going to get a retrace most times. We're just going to run it and go get it, especially when we have draws in liquidity higher. So in that scenario, that combined with the idea that I've also taught you guys about balanced price action, there's less reason to make it to this gap because we tapped that low and because this section of price is already balanced. So I was willing to take an entry on that idea. Obviously, I was right. This one singular candle rated all that liquidity, but I kept my stop below this imbalance just in case we did go get it. So I got in with light size, or not light size. This entry, this P&L right here was a full size entry. Like I risked full size based on this, but as soon as we rated that low resistance liquidity run, my stop loss was below the order block. And now here is where you could have found another entry if you didn't get that entry. I took an unorthodox entry, but the regular fundamental entry was still offered. So like I said, 5-minute bullish order flow. Now we get to step forward, find an entry based on 5-minute order flow on the 1 minute. So 5-minute order flow is bullish. That means you expect bullish PD arrays to hold. And obviously we see this price leg here with a bunch of imbalances. But as I just said, well, let me mark this out first. But as I just said, on the 1 minute, below this price point, we're already balanced out. So the odds that we're going to make it back to this gap are very, very slim. And the odds that longs are going to happen here are high. It just makes way more sense. So on this push down into this gap, you could have already been in. You could have already been in on this gap and it would have made sense as long as stops were below this order block. So, well, on stream, I said the only way that I would have added is if we pulled up to the halfway point. So let's just say that was the entry. It just makes sense. Halfway point, stops below the order block, and then just aim for previous day's high. This could have been your entry today and it would have made a ton of sense. And it completely follows the entire game plan. Identify the draw on liquidity, the set of failure swings in previous day's high. Okay? Daily profiles. It was bullish. It was a bullish daily profile. It was a New York continuation. 5-minute order flow went bullish towards my daily profile and my draw on liquidity. Then I found an entry based on the 5-minute order flow on the 1 minute. This gap was a 5-minute gap, and I knew that we wouldn't go below this 1 minute order block because price is balanced. This is a fire entry. Like I said, I took an unorthodox entry, but I did add on this push down. I added, and then when we got the displacement from this SMT and turned this into an order block, I also added again. So this could have been an entry too if you wanted, this order block, and then you could have put stops at the SMT low. But nonetheless, this hit. This right here hit. Okay? So that's 1 day's worth of examples. Let's go to the previous day. Can you pick me up from school tomorrow? No, dude. No. Alright. So that was Tuesday. Let's go Monday. I know Monday was really choppy. As expected, though. So let's identify midnight open real quick just to make it easy. Okay, so first things first, we identify draws on liquidity. Where's market open? Okay, here's market open. So at this point, I see a London low. And then I also see a previous day's high, or Asia high and London high with relative equal highs. So there are draws on liquidity to both sides. Let's go lower to identify some draws on liquidity. Yeah, that should be it. That should be it for draw on liquidity. So now, daily profile. So far, I would say it's bullish. Where's midnight open? Mama say, mama sa, ya mama sa. So midnight opened here. We don't go anywhere to the upside that's important. Then we go down into a daily order block. So from here, why wasn't yesterday London reversal? What, dude? I don't see anything about this saying London reversal. Anyways, I don't even see what you're talking about. Where's the fair value gap? We literally opened, went into nothing, and then went straight down. All right. Anyways, we'll talk about that later. But yeah, so those are my draws on liquidity. Daily profile so far is set up for New York reversal. Like I said, that low pulled into this daily order block right here, which is one of the places that I had potential to have low of the week at, was the daily order block. So at this point, I want longs. So I see the draw, but this is another thing too. I do find that my least probable trades come on days where previous session liquidity is on both sides of the market, unless it's a New York continuation. So like on a New York, this is a New York reversal setup, but we have previous session liquidity to the downside. Days like that, I've noticed, are lower probability. They hit less often. So this is just one of those days. But still, I'm looking at my draws on liquidity to the upside because of a New York reversal setup. So I'm just waiting for order flow to get bullish on the 5 minute. So at open, we have this dip down. I think that formed an SMT. I can't remember. Yeah. Regardless, we had this push down, high time frame order blocks. Then this 5 minute closes above this. So this is a 5 minute order block. So that is the start of 5 minute bullish order flow. Now I can go to the 1 minute and look for something. So at this point, I mean, if you, I caught an entry this day, but it was an interesting one. I caught this. And keep in mind, you want to be trading after the, I'm going to make a side note for rules on the Google Doc, but you want to be trading after the macro. So for me personally, I'm waiting for this 1 minute gap to get inversed. After the macro starts, this push up inverses this gap. This is the trade that I took. I did take a loss prior to this, but this is the trade that I took. Got in here. Like I said, this 1 minute gap got inverse, but that also confirmed this 5 minute order block. So I got in there with stops below this 1 minute order block, and I was targeting at least midnight open. So I took a small partial once we got here, but outside of that, I was waiting for midnight open, and then I got break even stopped. So it was just a choppier day, and like I said, it's always at least I've personally noticed so far, I don't have like documented stats on it, but it's a less probable day when we have previous session liquidity to both sides of the market on a New York reversal setup. But nonetheless, that's just another day where you could have found a trade. Easily could have partial on here, easily could have made money and then got break even stopped. I've just been trading like a douchebag, so I lost prior and then didn't win much on that. So that's just on me. But another day with the winner. So let's go back a little bit into last week real quick. What time is it? Let's do one more example because I have to go somewhere in a minute, like literally a singular minute. So let's go to the day prior. Oh, W promo. Wait, hold on. W promo. Okay. So let's go to last week. Let's go to a clean day because last week Friday probably wasn't clean. Or let's just do it. Let's just do it. Get it over with. Go on. F that N word. Get it over with. Okay. So let's just do this real quick. Okay, so that's very obviously a New York reversal looking setup. I'm seeing London lows. By the time we get to market open, there's no previous session liquidity to the upside. I can be watching these relative equal highs, but realistically it should be a New York reversal setup. And yeah, the only real draw on liquidity is these previous session lows to the downside and previous day's low. So as of right now, I'm definitely leaning bearish. I see us within this 1 hour for value gap. That's our key level. I'm looking for a New York reversal. So draws on liquidity as of right now are London low and midnight open. And then my daily profile is bearish as well. So wait, hold on. Yeah, my daily profile is bearish as well. Looking very AMD-like. So what is that in the chat? So I want shorts, obviously. Now, 5 minute, get bearish from me, Papa. So steps 1 and 2, identify the draw on liquidity, identify daily profile. That has made me bearish so far. 5 minute order flow, get bearish on them hoes. Okay? So 5 minute order flow did in fact get bearish on them hoes. And then the only time we got a real 5 minute entry was on this 5 minute for value gap. So once we tap into that 5 minute for value gap, I can go ahead and look on the 1 minute. This day I got break even stopped like 7 times though, so not the best example. Very interesting price action, but nonetheless it's set up. So here's the 5 minute gap. We get to tap into the 5 minute gap. Now you can look for a 1 minute entry. So off that thing, this 1 minute gap got inversed, coming straight off the 5 minute thing, 5 minute for value gap. I took this entry, put stops above this 1 minute order block, and then I ended up getting break even stops because I was aiming for midnight open at least, really wanted London lows. So we pulled, got really close, and then I trailed my stops to this order block in profit, got stopped out. Just is what it is. So, I mean, no losing days in 3 examples. Obviously, I would show more if I had some time, but realistically, that should be enough to help you understand like what the model is. But let me put in side notes for like risk parameters. So, 2 trades a day max, and or 2 RR loss max. So, like, the reason why I say and or is because if I took 2 trades, one got break even stopped and one lost, but I see like an absolute A+ setup and I'm only down 1R in the day, I'm willing to take that trade again. But one thing that is a hard rule is 2R. If I lose 2R in a day, I'm done. So that's a hard rule. This is a pretty hard rule as well. I don't typically exceed 2 trades a day. But like I said, I leave that as it is because just in case, if I want the 3rd entry and it's perfect and I'm only down 1R or half an R, I'm going to take it. You know what I mean? And then the other side note is not trading before 9 a.m. These are really my only 2 rules. And then I just follow my model. That's really it. Do you set limits on EQ of fair value gaps? Only if I need to. Like today, you would have needed to if you wanted a good risk reward. On this fair value gap. If you entered up top and put at stops at the order block, it wouldn't have been good risk reward. But rarely. But yeah, man, I mean, that's it. That's a couple of examples. This is the model. Not too crazy. Like I said in my TikTok, bro, it's not complex. It's complex to learn it, but once you know this stuff, this is really simple and clear. It's a very clear framework. But yeah. So I'm gonna get up out of here. You guys have a perfect, fantastic, gorgeous day. Yeah, hopefully this helped.